Hi guys, welcome to this Moneycontrol live stream. You're watching stocks for the next innings with me, Nandita Khemka. In the last two episodes, we put the spotlight on the housing finance space and on the consumption theme as well as to how these sectors are poised to take off in the third innings of the Modi government. But one theme that hasn't really taken off, even though the markets are perched at record highs, is the entire tech and AI theme. Although artificial intelligence is the buzzword, the hottest trend in the market right now with the kind of rally that has played out in the likes of Nvidia. But for Indian stocks, it is yet to see its golden period. So today we are putting the spotlight on a stock from this space, Affle India. Is this stock a must-have in portfolio for the Modi government's next innings? Could it take off in a big way as the AI theme plays out from here? So let's touch base with our expert on the show and ask him as to what he really thinks. Joining me is Karan Tarani, who's the Senior VP at Elara Capital. Karan, always a pleasure chatting with you. India's digital economy is expected to reach $1 trillion by 2030, right? The number of digital commerce users in India is also expected to grow somewhere around 3 to 4 times by FY30. How well placed is a company like Affle India to capitalize on this opportunity?
Hi, Ananda. Good morning. It's always a pleasure to be here. Affle India as a company is a perfect digital play, in terms of mirroring the entire penetration opportunity as far as digital is concerned. We are seeing massive consumption trends on digital, mobile phone, connected TV, wearable devices, tablets, everything put together. So I think Affle is the correct play here. More than 90% of their consumption, rather, for now, comes from the mobile-led device. A lot of conversion happens over there. So as consumption goes up, the traffic will increase. As traffic moves up, advertisers will, want to piggyback on this medium for, driving, their advertising campaigns. And that is where Affle has a play here. So it's a perfect digital play as far as programmatic advertising is concerned. And more the penetration, more the consumption, more the plays we have. And one can't forget that there are so many apps that we have to play with, right? If you look at mobile, on an average, today we've got close to 35 to 40 apps on one smartphone. So a lot of consumption right now happens on the apps, not on the browsers anymore. And Affle is a programmatic ad tech player who has a play in terms of this mobile app ecosystem.
But it's also looking to diversify into connected TV, right? How much of a push to revenues could come in from there?
See, connected TV is a very large opportunity as far as monetization is concerned. As of now, Affle was having a very big play in the mobile space. What happens in the mobile space is that you have just one single user, viewing the content. The kind of basically the experience that you can have in terms of mobile, in terms of viewing an advertisement, or for example, clicking on something which is an advertisement, is very different as compared to connected TV. In the case of connected TV, you can have more than 2-3 viewers watching at the same point of time. The experience is good because of the large screen format, right? So I think connected TV is a very big untapped opportunity. And for a market like India, today we've got only about 20 million connected TV households, and the total number of households is about 280-300 million households, out of which the TV households are somewhere in the range of 200 million households. So there is ample scope for connected TV to penetrate deeper into the India market, and Affle is going to have a play herein as well.
Of course, connected TV is an opportunity that is yet to really play out in its full potential. But when it comes to web browsing, there has been this whole thing about Google going cookieless, right? But it has been the company has been delaying this particular in fact, going cookieless is something that it is delaying. It has been delaying since 2020 itself. But could that be a big threat to the profitability of the company, because cookies are fundamental to ad targeting as well as measurement, right?
So firstly, Affle does not use Google cookies as such in terms of their conversions. What we have as a viewpoint over here is that basically, as per our checks in the industry, if Google goes cookieless, and firstly, Google is going cookieless more in terms of the browser-led, the browser-led consumption, only not in the app economy. But what's going to happen because of this is that the signals in the digital advertising ecosystem may become weak. And because of this, you can see very big increase in terms of the data cost for the ecosystem. And as we all know, Affle, it's a programmatic ad tech company. They do have their own, partnerships as far as data is concerned. They also have their own very big database, which they built over a period of time. But somewhere they have to invest in terms of data as well. So we believe that, some portion of their costs, in terms of the programmatic ad tech cost, is data cost. And if the data cost goes up in the ecosystem because of Google going cookieless, there could be, or rather may be, a potential impact in terms of their EBITDA margins or their profitability profile. But as we all know, in the last 2 to 3 months, in the last quarter con call, Google clearly had mentioned that there are no plans of going cookieless right now. They will review this, maybe in the next year, and there is no significant timeline. So last time when Google came with the cookieless, they were given a proper timeline that in Jan they will start going cookieless in 1% of devices. June they'll get fully cookieless. So there's no timeline now, and I think this entire uncertainty is now gone away. That data costs may go up, which may have a negative impact in terms of average profitability. And I think that's the reason why Affle has also kind of done well because of this overhang going away. This is one of the reasons in terms of why the stock has performed.
Okay, let's also talk about the company's reach, right? If you look at the international business, the penetration there has been pretty good. In the fourth quarter as well, it saw a very sharp recovery in the international business. But how are things really shaping up in terms of revenue and growth rates here in India?
See, I think one more thing which has worked in favor of the company is also the international business, as we cannot forget that in terms of developed markets, the company has roughly around a 30% kind of a revenue share coming from that, which is predominantly the US markets. They've done a couple of acquisitions also in the likes of UAP and Jams. So that market has had been, significantly under pressure over the last 1.5 years because of seeing a significant decline in terms of organic growth rate. But I think we've seen an acceleration over there. We've seen companies like Google, Meta, Amazon reporting strong numbers, and the developed market digital advertising growth has kind of come back on track, which is also doing well for Affle. And secondly, they've also done a proper turnaround of their Jams business, which leading to better growth as well and profiling. So I think the developed markets was also a risk, which is now seeing some green shoots and some traction. Secondly, I think on the India business, I think the current revenue contribution of the India business is about 25 to 30%. India business opportunity remains to be very, very strong because we believe there are multiple triggers here. So firstly, if you look at the India business, I think the entire dominance of Google and Facebook is coming down significantly. So Google, Facebook, say for example, about 5 years ago would have a contribution of 85 to 87% on the digital advertising space. Now that has come to about 65 to 68% as per our assessment. And what's opening up here is video advertising, which is because of fragmentation of so many OTT apps. What's opening up here is so many e-commerce websites because of increased purchasing, increased consumption of e-commerce apps. And I think these two things augur well for companies like Affle, because the more fragmentation of these kind of segments, the better it is for Affle to have a publishing platform and a better player as well.
Okay, let's shift focus to the financials then. The management is aiming for 20% revenue growth in FY25 and is optimistic about better pricing and margin improvement as well. Do you feel the company is on track to achieve this, and what will be the near-term pressure from developed markets? Will that subside in the current financial year further?
So I think if you look at the growth rates, I think they are guiding for between 20 and 25% organic revenue growth rate. Historically, this company has done much better in terms of organic growth rates. It's been range of 25-30% and even 30% plus at times. So I think broadly, I think there is a possibility, or there's a high probability that they will be able to, get the growth rate as per their guidance, because markets across the board are, kind of doing well. Developed markets, we see the momentum has kind of, increased. In the case of emerging markets, which is the India market, again, there is enough traction that is visible here. And the non-India emerging markets, which is Malaysia, Indonesia, or the other non-India emerging nations, therein also the growth rates have seen sharp acceleration towards 35 to 40%. So I think there is a potential on an SOTP basis, the company could get growth of about 20-25%. I think pricing is going to be a function in terms of, efficiency, AI, better growth, better operating leverage is how they're going to play out. But we don't see any kind of big increase in terms of pricing. I think, if we're talking of 20 and 25%, I think only 1 to 2% of the growth is going to be driven by pricing. They've also acquired some company called UAP in the US, because of which their overall pricing has moved up by almost about 8 to 10%. So it's going to be more volume-led growth, more market-led growth than pricing-led growth.
And what about the order book? And how is the demand really shaping up in these overseas markets now?
So as I said, the demand is strong. India, I already mentioned that
Hmm.
what is happening in terms of the e-commerce and video. Developed markets also I mentioned. I think the non-India emerging nations, there's a huge scope for increased penetration. And if you look at the overall market as a whole, I think the developed markets, I think about 75 to 80% of their spends come from digital medium in terms of advertising. But in the case of India and other emerging nations, that number is 50% or below 50%. So I think there is ample opportunity for this number of 50% to expand to maybe 70% share over the next 3 to 5 years, which will give very good fillip to digital advertising spends and in turn drive growth for Affle as well.
Hmm. In terms of AI innovation, what are your thoughts? Because back in December, I think it had filed for 15 patents, and it's being looked upon as something which is more than protection. A strategic move to lead in AI innovation per se. So here, how could this translate into a bigger opportunity for Affle?
See, AI-led advertising is something which all tech giants are doing today. So, from the likes of Google, Meta, Amazon, if you read their commentary over the last 2 3 quarters, they all are investing a lot of money in terms of AI-led advertising because that indeed is the future. But in terms of contribution or share, it has not picked up significantly. We are currently on the mode of experimentation. Obviously, things are going to play out in favor as and when technology evolves. And yes, AI-led advertising will also have a positive impact in terms of a delta, EBITDA margins, and profitability profile. So if AI does play out eventually, and if it does scale up, beyond the point, you will see margin improvement also because of this.
All right, let's talk about the valuations then now, Karan. Just looking at the performance of Affle India over the last year or so, 1 month return has been good, 9%. YTD, it has been pretty flat, 3.5% or thereabouts. On a 1 year basis as well, gained in excess of 20% or thereabouts. But at a time when mid and small cap stocks have seen a phenomenal run, this stock hasn't really taken off in a big way. So over the next 3 to 5 years, do you see a lot of headroom for a very strong rally in this particular stock?
Yes, of course. As I told you, there were multiple reasons in terms of the why the stock didn't take off or why it has underperformed. They were going through a lot of transition challenges in the developed markets. The growth rates were not superior over there. They have seen a declining trend also. A margin improvement was not coming by. India also, you saw mixed performance as far as digital advertising. A lot of the startup kind of companies have gone through a very big concern time over the last 2 years, on the ed tech side or on the fintech side. But I think now things are stabilizing as far as startup companies are concerned and these large tech giants are concerned. So I think ad spends are going to come back on track. That's a very big trigger. Secondly, I think this is a company which will give you stable returns of anywhere close to 20 to 25% in terms of earnings figure. And we don't have enough companies, giving this kind of a return in terms of a high visibility. Third thing, in terms of valuations, historically, this company has traded at an average PE of about 42 to 44 times. But that was because of superior growth rates back then. Now I think penetration numbers have kind of increased, so I don't think growth rates are going to be as compared to historical averages in the organic perspective or the organic segment rather. So I think from a valuation perspective, FY26, we don't see much of an upside, not more than 10 to 15%. But yes, on a structural standpoint, if someone wants to play a digital company with a good solid 20-25% kind of an earnings compounder and maybe some delta re-rating, in a small manner, this is a good stock to play from medium to long term perspective as well.
What would be the trigger for re-rating? Would you say that any acquisition or any inorganic expansion, these are some of the levers that could drive a re-rating on the stock?
Yes, of course. So if you look at the acquisitions, I think whatever acquisitions they have done so far, I think Jam's acquisition was margin dilutive in nature. If you look at UAP, I think the margins were tad lower as compared to company averages. But I think going ahead, they have plans to kind of increase the margins in UAP. So if the UAP margins improve from here on, and if they increase beyond company averages, that could be a trigger. Thirdly, I think if you look at the environment right now in terms of the digital companies or other digital first companies, they are coming back very strongly. Many brands are wanting to go for D2C efforts, whether it could be in terms of their own websites, which could be via campaigning on social media and other apps put together. So I think digital first companies, coming back in terms of spending and the environment improving, ROI conversions improving. I think these can be potential triggers for a re-rating from the current target multiple of about 40 times that we have today.
All right. Any risks that could dent profitability and perhaps impact return ratios? Of course, that Google going chipless could be a risk. But aside of that, anything else that you're spotting?
I think more than Google, I think the Google going cookieless could have an impact on data costs. So if at all, whether it could be because of Google cookieless or any other reason, if at
Hmm.
all data costs kind of go up, then you could see a negative impact in terms of the overall profitability profile. Second, I think is the market competitiveness as well, right? So I think if you look at the markets, as I said, Google, Facebook dominance is kind of coming down. If they were to pick up in some manner, if they were to innovate, via AI or VR or metaverse, and if they again try to gain market share, that could be some sort of a small negative for Apple. And third, of course, could be the health of the digital first companies. If they are spending aggressively, it is fine, but if there is some issue in terms of regulation risk, in terms of for example caning in GST or any kind of risk whatsoever for the digital first companies, that could be a risk for the growth profile for Apple.
All right, I think majority of analysts covering this stock have a buy rating on the stock. 8 of them have a buy rating, 2 sell and 1 hold. But what is your rating on the stock, and what is the kind of long-term target would you be looking at if I asked you to stretch a little beyond 1 year?
So I think we also have a buy rating on the stock. We upgraded the stock about 4 months back. I think from a medium term or near term standpoint, rather, as I told you, there's not upside of more than 10 to 15% fundamentally. But yes, from a medium to long term standpoint, basis a 25% kind of earnings cycle that the company could see, you could see a target price of more than 2,000 over the next 2 years.
Right. One last question, really. Recently, promoters have sold some stake, in the company. Do you think that could be an overhang in the future?
I don't think so. That's just a process. I don't think that could have a big negative impact because the business performance remains to be very solid and stellar.
All right, that's the view then. With that, Karan, afraid we're running out of time. Thanks a lot for taking out time and joining in and sharing your thoughts on this talk with us. Look forward to more conversations on the digital space, on the food tech space as well with you in future.
Thank you, Nanta.
Thank you. Thanks a lot. Well, with that, we've come to the end of this edition of Stocks for the Next Innings. Of course, we have highlighted the points as to what makes Affle India a good investment bet. But we are in no way recommending or making any recommendations to buy this stock. You all, of course, need to consult with your financial advisor before making any investment decisions. But with that, completely timed out on this edition of Stocks for the Next Innings. Stay tuned to Moneycontrol for all your other news and updates, and have a great day.